Hi, everybody. I wanted to give a quick update on the market and just talk about a couple of different things, other things than just the market. I don't have any changes for the portfolios. The only thing that I did change is that if you look at my last week's portfolio, there's a security called UCO in there, and I have been putting a much greater weight allocation to it over the last, since Monday of last week. So if anything, that's the only change that I really have. And I have it on the site as far as the actual allocations for the different securities. As far as for the market and what's going on this week, we have a lot of earnings coming out from some of the biggest companies, obviously, such as Google, Microsoft, and so forth. But if you look at different dimensions of the market right now, especially from the interest rate side, if you look at volatility, there's still some uncertainty in the market. Most of it's been already discounted, and we have seen the market actually come back quite a bit over the last few weeks. But there's still uncertainty. I am not seeing very optimistic predictions yet, especially when it comes to volatility. Interest rates are still very volatile. They're still moving up and down. They're not in the realm of outrageousness, but they're still moving, especially on a 10 year. So there's still some uncertainty, but most of it's still, I think, positive. And if you look at it in holistically and in general, it's positive. I can't say that it's too negative. It isn't negative. Okay, so again, the stay the course, and again, I wouldn't change too much. I have done some hedging, and I do have some hedging in place, but not a whole lot. It's a very light hedge, if anything. The second thing that I did want to talk about, and that is for accounts, for especially for people that have financial advisors. Make sure that as you're getting the results for the quarter, for the past quarter, how well the accounts have done, but make sure that they're also giving you a reference, some sort of reference as to what you could have possibly done as far as results and performance. Um, every account, depending on the allocation, and most accounts have equity as well as bonds and some other securities or some other assets. But especially on the equity side, the true benchmark is the S&P 500, and there are two versions of it. You have an equal weight one, and then you also have the actual raw, just weights based on the sizes, market capitalizations of the companies. Um, the one that's based on the market capitalizations, obviously that's skewed towards technology because some of the biggest companies in the S&P 500 are the technology companies. But that is the S&P 500. And if anything, that's what the benchmark should be. The equal weight one across all of the securities on the S&P 500, it's a way of smoothing the S&P 500. So I wouldn't call that the best gauge. So make sure that, again, as they're giving you results, that they're also giving you, especially on the equity side, and most likely it should be the S&P 500. And so make sure that you're getting results that are actually better after you account for the fees that are actually better than the S&P 500. If anything, they should be the same, but they should be actually better. And if not, they're not, then you can probably do a lot better on your own. Either way, thank you. And like I said, that's my update for the week. And then we'll talk again maybe later this week or actually the beginning of next week when I do have some changes to the portfolio.